just the numbers on their own is not enough without the mindset. And I think when you get the mindset, you rely less and less on the numbers.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome back to the Two Traders Podcast. I'm Walter Peters. I've got Darren here on the line. Hey there, Darren. How are you today?
Yeah, I'm really good, Walter.
Well, Darren, I talked about this in the last episode. I was thinking about exploring this idea of a quantitative number or ratio that essentially tells you yes or no, are you going to make it as a trader? And I think this is going to be interesting because I'm not sure that we exactly have the same points of view. And one of the reasons why this number I think is useful for traders is because some traders just need to have numbers. Some traders are very quantitative and they like to look at these and they basically use numbers to make their decisions. So let me explain what the number is. The number is what I call the trader ratio. And what you do is and anyone can do this. It doesn't matter if you're trading live or if you're trading on demo or, through Forex Tester and back testing or something. What you do is you take all of your winning trades, you add them up, and that's your sum total of winners, and that goes in the numerator. And then down below, what you do is you find your largest losing trade, and you stick that down in the denominator. And what you should come up with is a number. Now ideally that number is a whole number. because if it's not, then things are really bad. But if it's a whole number, the number that I look for people to shoot for is 6 at a very bare minimum. And if you have a number over 6, like 13 or 20 or 10, that's great. That's really good. And the idea here, the thinking behind this is that if you're doing well as a trader, what will happen is either if you have little tiny winners, you have so many of these little tiny winners and they add up to be a big fat pot of profit. So that means that even your largest loser does not dwarf, which is basically your biggest mistake, does not dwarf your big pot of winners. And likewise, let's say that you don't have a bunch of little tiny winners, but instead you have a few giant winners and a lot of sort of medium or small winners. Even then, you would still expect the same thing to happen, which is your numerator should be a much bigger number because you've had a few large winners. Let's say if you use some sort of trailing exit or something like that, and those winners will so dwarf your largest loser that you end up with a big fat number on the top. And that, of course, will give you a number of 6 or greater. So that's basically the idea behind this. And I know that you probably have some interesting thoughts about this, Darren. So let's hear sort of what your thinking is behind this, because I know you're not, your approach to trading is very different to most traders I've ever met. And so I think that you might have some differing views here.
Well, yeah, I mean, I've made it clear that I don't like being overly reliant on measuring trading in terms of numbers, because I believe so much in the sort of the your belief. And the problem I have with it is that I think that strategies are reliant on the market, and so dependent on how much data you put into it, then that might skew your number. It's things like the real problem I have with numbers is because of the expectations. And I really like this idea that the expectations you have and the mindset because of those expectations deciphers your experience and your results. And if your expectations are too good, okay, then that can have a negative effect on your trading. And at the same time, if at the other end of the spectrum as well. So I'm unsure about how it affects your mindset when your actual results differ from this number that you've got. So in other words, say you've got your number is 6, and then because the market's particularly unfriendly for your particular strategy over, like, say, the last couple of weeks, that then are you then led to think that there's something wrong with your strategy, whereas it might be that it's just not a very good market, or you've made mistakes. Do you not have that problem?
I think what you're talking about is a really good point. In fact, it reminds me of a book that I recently read. I don't read a lot of trading books, but I read this guy's book, and it was fascinating because essentially it's exactly, I think it's a corollary to what you're touching on, which is these guys, it was a bunch of traders, okay, Forex traders. They got together, and we could probably do a whole podcast on this book, but basically I don't read a lot of trading books. I did read this book recently, and the reason why I read it because it was a fascinating story of a group of traders basically making this mistake. The mistake was that they went through and they back tested their system, and they essentially decided that their system wasn't, they literally thought it was the best thing ever, and they couldn't find anything better than that. And so they all pooled their money together and traded this system. But what had happened was they were looking at the euro. Now, the euro was a new currency, or newish at the time. Still is, really, isn't it? And so what they had were the data that they had on the euro. And so when they looked back and they did their testing, essentially the euro was in a trend. Now, with hindsight, they could see their error, but essentially they were depending on the euro to keep moving somewhere, to keep going. And they didn't understand that their data that they used to project into the future was based on one sort of phase of the market. And then once they started trading live, the market wasn't really in that phase anymore, and it essentially destroyed them. But it was a fascinating sort of way to see this error. I wouldn't really say it was curve fitting or overfitting the system. It was more just bad data in. Is that kind of what you're talking about here? Is that sort of the idea? I know there's another sort of mindset point that I want to talk about that you're making, but in terms of the data, they put this data in their system, and it didn't really, that same sort of data didn't show up in the future.
Yeah, I think, it's more on a sort of deeper mindset level that I try and sort of make the flip. And we're going to do a podcast about this placebo effect. And there was this really interesting experiment done once where they took this group of maids and they split them in two, okay, and they told one set of maids, look, what you do, your job is actually exercise, and really good exercise. And then to the other group, they didn't say anything to them. And what they found was that the maids that they told they were doing exercise lost weight and were started eating more healthily, and in general, after a period of time, had much better health than the ones that they hadn't. And essentially what they're saying there is if your mindset is right, then the results you'll get from that will be very different. So essentially they're all doing the same thing, but because one group had changed their mindset and how they were thinking about what they were doing, they had different results. So I just, rather than looking just at the numbers, I'd kind of look, okay, well, what really are you saying by making that calculation? And really what you're saying is, you either have to have some, a few very big wins to cover your losses, or you need lots of wins to cover your losses. So it's, essentially it just kind of goes back to that sort of key concept. Am I going to give a wider stop and take more wins and exit my trades a bit earlier for smaller wins to ensure that I make profit? Or, am I going to take tiny little stops and shoot for those ones that run, and those big wins will cover my losses and give me a profit? So, although the whole sort of concept of the number I like, it's just a case of saying I'm not going to sort of focus on the figures. I'm going to think about, what is the logic behind this?
Yeah, that makes perfect sense. I actually heard about that MAID study just a couple weeks ago. Actually, it's funny that you brought that up. I think we'll have a really interesting discussion when we get into positive thinking and placebo effect and all that. I think that'll be great. And I think that what you're talking about with the ratio is is spot on. However, I would also add that your ratio would also go down if you were pretty poor at managing your stops. In other words, I don't know about you, Darren, but I've had this experience before, although I haven't done it in years, but I've had this experience where before what I would do is I'd be in a trade and my ego was so attached to the trade that I would actually move the stop as the trade unfolded to give it, quote, a little more room. So if you're doing that with your trades, that will also, show up on the ratio too, because it means that you're mismanaging your losers as well. So I think that's a little bit of it. So, but let me clarify I'd like to clarify what your thought is on this. So you're not really talking about this idea like The Secret and all that, where your thinking and your ideas about what's going to happen create the future. That's not really what you're talking about. You're talking, it's a little bit more mundane than that, isn't it? Is that, or am I off? Are you really talking about sort of this idea that we create our future by our thoughts?
Not really. No, it's more a case of saying, look, if I know the numbers, it's not really going to make any difference. It's like, I believe in my strategy will work as long as the market is agreeable and that I make good decisions. So whether I know what the particular win rate is over the last week or month is not going to make any difference to me. It's kind of like, look, this is my strategy, I believe in it. All I'm really interested in is looking at the end of the week, did I make profit or loss?
Right.
And that's kind of, for some people that's probably really hard to do, but for me I find it easier. If I sort of start delving into all the figures, I think, well, okay, well maybe I should be adjusting my stop, and maybe I should be, and I find myself sort of meddling with my strategy then. Whereas I sort of think, my sort of strategies work on just like the basic logic that, as long as price moves up and down, then I'm going to make a lot of money when the market's favourable, and I'm going to have not so good times as well. And the actual figure of it, I just don't think it can be, for me personally, that you can kind of, iron it all out and make it. I think essentially is trying to get to this removing the uncertainty again, and I really try and sort of shy away from that and sort of say, look, it's uncertain. Let's it's going okay. Let's hope the market continues behaving in this way. And
yeah,
I know that's people hate to trade that way, but for me that just feels right.
Right. Yeah. So you're talking about the focus should really be on, if I've got this right, the focus should really be on executing your system and following your system, and not trying to rely on these numbers, for confidence that you're doing the right thing. Instead, you should really be focusing on the next trade and making sure that you execute that in the manner that you should. Is that right?
Yeah. Much more methodical and less sort of quantitative.
Yeah. So my question is, what about that guy, that trader, just to play on the other side of it here, the guy who says, because I've met these traders, I need to know what all of this is going to look like before I ever risk a dollar. So they've got this mindset, which is a little bit different to yours, and they need these numbers. Otherwise, they feel like there's too much uncertainty, as you say. And I know we get paid basically for uncertainty, don't we? We get paid for putting money on the line in the face of uncertainty. That's really what trading is. However, there are some people, and for which these numbers work quite well, where they can point to that number and say, see, aha, now I'm going to make money. This trader ratio told me so.
Yeah, I just think that if you haven't already got to that conclusion from the strategy you're trading with, I just wonder what you're basing the belief in your trading strategy on,
Right.
Because it's like saying for me it's basically it's kind of ignoring what the market is, and okay, there's this kind of, there is like a sort of the market to me is chaos and order, and it's patterns and non-patterns, and it's constantly like in a flux between the two. So when I find that when you try, me personally, when you try and iron all of those things out and say, right, this strategy is 65% win rate and my risk to reward is 3 to 1, I find that those figures fluctuate a lot, and the average might be like that, but in the actual process of trading, you I get drawn by those figures. Well, okay, why was my win rate less this week? And in the end, it becomes more about the figures and less about like the performance of trading. I guess really it's like it's a personal thing for me.
Yeah, absolutely. Yeah, but I think it's interesting because if I were to guess and I say, Darren, if we were to walk in and look at your trading desk, would it be nice and neat, or would there be things all over the place?
Well, now in the past it's been a real mess, but it's actually neater now. But that's because I need to be. For me, it's all about being methodical and getting up and repeating the process without really thinking too much about the process or the outcome or the win rate or the number. It's more like I like playing a sport really. Where you go out to bat cricket, you just kind of go through the process and you're not thinking about your batting average when you're actually batting.
Yeah, exactly. Yeah, I was gonna guess that you had a chaotic and messy desk, because that's how you kind of see the markets. How the markets would kind of fluctuate and change, and there's sort of this nebulous, changeable thing. So that was my hypothesis.
Well, maybe compared to yours it is, but in my eyes it's fairly organised.
Right. Fair enough. Okay, so I guess what we're saying, one of the take home messages here is that there are going to be some traders, I suppose, that whether it's right or not, what they want these quantitative numbers that feel like something that they can hang their hat on. I suppose it's a lot like those traders who need indicators because the indicator told me so. I know the market's going to do this because the indicator told me so. So it's sort of like having numbers and having an indicator are similar in that they help you, they help you erase some of the uncertainty. The problem is, not all traders fit into that box, right? Some traders embrace the unknown and they understand that there is uncertainty in the markets, and that's basically what the markets are, I suppose. So how do those traders, are you suggesting that perhaps the traders that don't look to quantitative numbers to ease their uncertainty, they shouldn't even be trading? If I hear you correctly, they shouldn't even be trading until they are so certain in what they're doing that they know that they're going to make profit.
Yeah, I don't really want to go that far with it. I think I'm just kind of what I'm saying is just the numbers on their own is not enough without the mindset. And I think when you get the mindset, you rely less and less on the numbers. So I think maybe initially, you do need. I mean, I do. If I I still backtest the system I trade every week. So when I finish trading, although I've not been thinking about the numbers, I do go back and look at pairs that I didn't trade that week, see how well the method worked on that, and that's kind of like a sort of just sort of keeping my confidence in the method high. But I don't sort of meticulously track the numbers. I say, okay, there was the strategy performed well there. The Dunn Fund, the trend trading guy, I think.
Yeah, down in Florida.
Yeah.
Those guys down in Florida. Yeah.
Yeah, who's been 25 years. He's been successful, hasn't he? But in that time, he has periods where he has big drawdowns, and you think, I think he has 20% drawdowns in it, but every year he just makes profit. He makes profit, and he says to people, "Don't ask me about my strategy. Don't ask me about the numbers. If you want to invest in the fund, then you put your investment in and you don't ask any questions. And you think, well, how does he deal with those drawdowns if he then went and started crunching the numbers on them? Because surely that would sway his decision, but he just keeps trading the same strategy over and over and again, and he knows it's going to come good in the end. So I think that for me, you have to have that belief to back the numbers up. So I think just having the numbers alone is not enough to make you trade successfully.
Yeah, absolutely. And I think, if I understand it correctly, I believe they're always in the market. So they're always sort of looking, they basically have to decide the market's going up or it's going down based on their system. And so they're going to get some whipsaws in there. One of the reasons why I'm so fascinated by trend followers and trend following funds such as Dunn is because I think it is so difficult to psychologically to maintain your confidence when you have those massive drawdowns. So yeah, I find that fascinating. So you're essentially saying that he's in the camp that you're in, which is, look, really what you need to look at here is whether or not this system's going to work for you, if it's going to make money. And the way you find that out is you do it, right? And so he's not really one for numbers. And I think it's interesting that supposedly Ed Seykota is the same way, where he says, look, we don't have any numbers, we don't offer any numbers. All we offer is this is a real account that started with this amount of money and it ended up with this amount of money, whatever it was. They put in $10,000 or $3,000 and it's worth $3 million now, or whatever it is. So it's the same idea, which is the numbers don't really matter. What matters is, it's almost like Machiavellian trading. It doesn't really, by any means necessary, we're going to grow this money, and let's not talk about the numbers or these, the nasty side of it, the drawdowns. We believe in it. We know it's going to work. Sure, there's going to be bad times along the way, but this is the way that we do things. And I suppose there's a lot of honor in that approach, in being so certain. Although I would suspect that even Dunn and those traders have to spend a lot of time reminding themselves that what they are doing is profitable, especially during those drawdown periods.
Yeah, I think, talking about when we start to learn to trade as well, I can't talk for everyone, but I know a lot of people, and especially me, I went through a lot of strategies where I tested them and they were successful and the numbers were good, but then I'd go on to lose money trading them. And that's because I thought that as long as the numbers stacked up, it was all right. But there's an extra element that you need to add to the numbers, and that's the mindset. So I don't want to sound like I'm saying that having these numbers is not useful. They are really useful, and they're a great indication of how good your strategy is. But more importantly, your results going forward need to match those numbers in some way, and I think that comes from mindset. So the danger is giving too much weight to the numbers and not thinking about the mindset and the fact that there is going to be fluctuation within those numbers.
Yeah, absolutely. And I think you're right to put the focus on the future and on execution, because I suppose there are going to be traders who look back to, and perhaps these traders are drawn to systems that are automated where they can just point back and say, look, this is what it made. So all we have to do is do the same thing going forward. But it never really works that way. And a lot of really smart systems traders do things like double the largest loser and anticipate that happening in the future, because they know that inevitably the results are going to be a little bit different than what you've seen in the past. And that, to me, is smart, is to sort of take a step back and go, well, yeah, this is what we've seen in the past, but we're pretty sure we're not going to see exactly that in the future. You may have a lower win rate by 2%, or your average winner may be a little bit smaller, or your average loser may be a little bit bigger, or whatever it is. But you don't want to be trading on a fine line where your position size is so inflated and maxed out that you actually end up pushing yourself over the edge into the when you blow up your account, right? When you get to that point where you've gone too far with your position size because you're so convinced that the numbers are right. And I think that the big lesson I'm getting from you here today is you need to focus on the future. You need to focus on execution, and that's really where your effort should be, because the numbers can be a bit of a crutch. And although I think for some traders it's a good thing to have because some traders just need to see that, I think that for other traders, they understand that the real important thing that you need is the right execution in the future. Otherwise, all those numbers don't matter, because if you're not executing as you should, you're not even trading that system in the past that made those numbers anyway.
Yeah, and also if you look at the results of funds as well, it's not always the same three funds in the top three every year. It fluctuates. Funds have good years and bad years, and their results fluctuate. So, also their numbers are fluctuating. Do you see what I mean? So if they're, say you have a good year and you say, right, well, we can risk 5% of trade per trade next year because this is our number, and then next year is not so favourable market-wise, conditions-wise, and then you lose more money because so you kind of have to be able to react in the moment as well, and make some sort of judgment calls which aren't based on numbers, and that's something that you learn with experience.
Absolutely, yeah, absolutely. I think that makes perfect sense, and I think that's why there's a trader I know who employs traders, and he varies their position size based on how well they're doing. And we can probably do a whole episode just on this idea of how do you do technical analysis on yourself, which is basically what he does, which I think is fascinating and very. He's a very switched on guy. But for today, I guess the point is really you need to decide. How are you going to approach the future? Are you going to make sure that you're doing what you've always been doing? And do you understand that things are going to change? Does that mean you're going to change your whole thing? Because as you say, these funds at the top of the leaderboard, they flip flop every year, don't they? And what I always think it's funny when you read in some of the mainstream, economics magazines and business magazines, when they talk about, trend trading is dead now. It's always when the funds like the Dunn fund have had a really poor year that they say, that's it for trend trading. These markets are too choppy because of all the all the algos that are in the market. They've changed the game and this and that. And then it's almost too funny, because as soon as those articles come out, the next year they'll have a banner year. It's like you can't do any better at picking tops and bottoms in these trend following funds than just watching what the mainstream business journalists have to say about them. It's just perfect. But yeah, so that's take the big picture, right? So what I'm hearing, Darren, is we're going to take the big picture. That's the point of view that you should have. That execution is what's going to get you the money, and following your system and understanding that, you're going to have down years. A trader that I know, a really good trader who's now gone to a private fund, I remember he called me once and he said, it was a few years ago. He said, it's been a really tough year. How has it been for you? It's been weird, like these big shadows aren't working as much anymore. And I said, you have to be a little bit more, I said, yeah, it's true, but you have to be a little bit more picky and things like that, and just understand that if you don't have a good trade, you don't have to take a subpar one and that sort of thing. But yeah, even he, who had been trading for a decade, had come up on this year where it was like, oh no, I don't, he wasn't really questioning himself, but he just wanted to make sure that it wasn't him, so he was asking me and that sort of thing. So I thought that was interesting.
Yeah, and one of the most famous, most recent good examples of this over-reliance on the numbers was, when they were bundling these mortgages up and reselling them on, and everyone thought that they couldn't lose, and they were getting riskier and riskier with it because the numbers were good, But then you have that, black swan event and the unexpected event, and then you get caught out because you were too reliant on the numbers, and that's the takeaway is is use these numbers to get a feeling for your strategy, and if it has if it appears to make profit, but you need some more than that, you need to be able to sort of react and not just blindly follow numbers.
Well said. Well, thanks for your time, Darren. I really appreciate it, and we will see you in the next episode. What are we going to talk about next time?
Sabbaticals.
Excellent. Well, we'll see you then. Take care.
Cheers, Walter.